Hello and welcome to Crypto TV. I'm your news host Parvati Nirvan and let's get into the world of crypto with English News Bulletin. Let's have a look at the headlines first. Cryptocurrencies rebound at the start of new quarter. Bitcoin above $20,000. FTX close to buying BlockFi for $25 million after walking away from Celsius deal. Crypto lender Celsius says exploring strategic transactions, other options. CFTC files $1.7 billion case against MLM for fraud. Coinbase sells client Geo-Tracking data to US Immigration Agency. Ethereum finishes Grey Glacier hard fork, pushes difficulty bomb to September. Coinbase seeking aggressive European expansion amid crypto winter. 76% Bitcoin millionaires wiped out in just 8 months. Hong Kong's OSL crypto exchange announces 15% layoffs. Cryptocurrencies rebounded Friday, also the start of the new quarter, after Bitcoin posted its worst half-year loss on record. Bitcoin traded about $20,000. The January-June stretch marked Bitcoin's worst 6-month stretch, down 59%. The record sell-off was capped by US Securities and Exchange Commission rejecting Grayscale's application for a spot Bitcoin ETF amid mounting specter of defaults among crypto players. In traditional markets, a slowdown in consumer spending rattled investors and raised fears about a coming recession. The rebound on digital assets was probably in anticipation that investors would likely bulk up on risk assets after a bad half-year performance, and also as some investors were comforted that the worst may be behind. Bitcoin was recently seen trading at around $20,400, up over 1.5% in past 24 hours. Ether, the second biggest cryptocurrency by market capitalization, traded around $1,100, up 0.3% in similar time span. All other major altcoins traded mixed, though mostly higher. Crypto exchange operator FTX is close to signing a deal to purchase struggling crypto lender BlockFi for $25 million after walking away from making a deal with troubled crypto lender Celsius, reports said. The FTX deal for BlockFi is expected to be signed by the end of the week. However, BlockFi CEO Zach Prince tweeted to negate the reports of BlockFi being sold for $25 million. The Sam Bankman-Fried owned exchange giant began discussions with Celsius about providing financial help or making an acquisition, but opted against further after reviewing Celsius' finances. According to reports, Celsius had a $2 billion hole in its balance sheet, and FTX found the company difficult to deal with. Crypto lending platform Celsius said it was exploring several options, including pursuing strategic transactions and restructuring its liabilities, among other strategies to preserve and protect assets following its mid-June turmoil. In its blog, Celsius claimed that it was working quickly to stabilize liquidity and operations in order to be positioned to share more information with the community. These exhaustive explorations are complex and take time, but we want the community to know that our teams are working with experts from many different disciplines, Celsius wrote. On June 12, Celsius announced it was freezing withdrawals and transfers in response to extreme market conditions, fueling speculations that the platform had become insolvent. The move left 1.7 million users unable to redeem their assets and sparked fears that funds would be locked indefinitely. The Commodity Futures Trading Commission has filed a lawsuit against Cornelius Johannes Steinberg and Mirror Trading International Proprietary Limited, charging them with fraud and registration violations. The complaint accuses Steinberg of engaging in an international fraudulent multi-level marketing scheme that brought in 29,421 BTC worth over $1.7 billion. The agency says Stenberg also used his company MTI in the scheme, which ran for nearly 3 years from May 18, 2018 through March 30, 2021. The civil action was entered at the US District Court for the Western District of Texas. CFTC in May had said that it was adding resources to monitor the crypto market. Coinbase has sold software to the United States Immigration and Customs Enforcement or ICE, which allows it to track crypto transactions, reports said. The software can track transactions made through several cryptocurrencies, including Bitcoin, Ether, and Tether. According to the reports, the exchange had been selling geo-tracking data and other information to ICE, the country's cross-border crime and illegal immigration agency. This is not the first such deal that the firm has made with the US government, with several other smaller deals also being signed with other agencies. Coinbase spokesperson, however, said it sources information from public sources and does not make use of Coinbase user data. The spokeswoman did not speak of how ICE was using Coinbase Tracer. Coinbase had also sold similar services to the Drug Enforcement Administration, Internal Revenue Services, and Secret Service. The Ethereum core developers successfully launched the Glacier hard fork today, a network upgrade that implemented the Ethereum Improvement Proposal or EIP 5133 at block height 150,000. The move will help delay the so-called difficulty bomb, a predefined increase in the complexity of Ethereum's proof-of-work mining algorithm by 100 days or to September. Ethereum network's switch to proof-of-stake consensus is also tentatively scheduled for the same time. The Glacier hard fork required the client software providers on the execution layer like Nethermind and Geth update their Ethereum nodes. Nethermind confirmed in a Twitter post on Thursday that the upgrade was successful. Coinbase is expanding its operations into many European countries in the midst of crypto winter. Despite layoffs and job offers, Coinbase Vice President Nana Murugsan announced plans to register in Italy, Spain, France, and Netherlands. The US-based cryptocurrency exchange has already hired its first staff in Switzerland and is licensed to trade cryptocurrencies in UK, Ireland, and Germany. Murugsan stated that it's the ideal moment to expand into other countries because many crypto-focused businesses are having cash shortages and bankruptcy risk. The crypto crash has seen the number of Bitcoin millionaires decline by more than 75% since November last year. More than 80,000 Bitcoin investors have had their millionaire status revoked due to the crypto market downturn. But lower prices mean the number of whole coiners is growing. Right now, just 25,601 addresses can count themselves as Bitcoin millionaires, a fall of 76.4%. There's also been a rather substantial fall in the number of addresses that currently hold more than $10 billion worth of Bitcoin. This figure stood at 10,587 last November, but fast forward to now, and it's plunged by 60% to 4,276. That's all for today's news. For daily news and updates of crypto world, don't forget to watch English News Bulletin twice a day only on Crypto TV. And do like, share, comment and subscribe Crypto TV on YouTube, Instagram, Facebook and LinkedIn. I'm your news host Parvati Nirmal signing off for now. See you tomorrow and keep enjoying the weather.